Welcome back to the Investing, Markets and Money podcast. And today we're talking about the technology sector, still one of the hottest sectors in the market at the moment. Coming on the podcast today, we have Mobeen Tahir, who's the director responsible for macroeconomics and thematic research at fund manager WisdomTree to discuss this sector in a little bit more depth. Welcome to the podcast, Mobeen.
My pleasure. Thank you so much for having me, Stuart.
This is a sector that a lot of people are invested in right now. There's a lot of interest going on. But I wanted to just start by going back a little bit in time, maybe 3 or 4 years, when it seemed like the sector looked very different. I'm thinking here back in 2019, before the pandemic. Do you think that the pandemic and that whole move away from the usual 9 to 5, 5 days in the week in the office culture has actually changed the tech sector and the demands people are making on it?
It seems like the pandemic has certainly changed the way many investors perceive the tech sector. It's perhaps, to some extent, even distorted people's expectations of what to expect from their investment in the tech sector. Soon after the market crashed in the start of the pandemic, around March 2020, we saw a rapid subsequent rally in many markets, many segments of the market, but particularly a pronounced rally in the tech sector, especially in, say, cloud companies, for example. I mean, people were making video calls, and so Zoom stock suddenly was going through the roof. People started working out at home, and therefore companies like Peloton saw their share prices surge astronomically. Cloud-based businesses were literally reaching for the skies. That, of course, was something that was not sustainable, and that was the key learning outcome from the pandemic. So the result of all of that was that today people still expect the benefits of investing in disruptive technological megatrends to accrue immediately, which is why parts of the market get hyped up very quickly and other parts of the market perhaps get ignored, even though there are opportunities well distributed across the spectrum. And this is something that can happen in markets in general, but perhaps was exacerbated during the pandemic. So at WisdomTree, our goal really is to continue reminding investors about the benefits of diversification and the benefits of patience, critical virtues in investing, and of course the importance of looking in places where no one else is looking.
And everybody's looking at Nvidia at the moment. I mean, we don't go more than about 24 hours without something else arriving on my desk about Nvidia. There's a lot of enthusiasm for that stock, a lot of concentration on Nvidia because of the whole artificial intelligence theme. But does that mean that other opportunities in the AI sector are being ignored, and are there other parts of it that you think could benefit from this theme going forward?
So the first thing to say is that when it comes to the hype that Nvidia has garnered, uh, it seems that it's partly attributable to the point that you made earlier, that it's that mentality that markets adopted during the pandemic. What changed during the pandemic? That idea of getting too excited about a part of the market that's hot at that moment in time. And that's what people can see right now, that Nvidia is tangibly showing great performance. It's coming up with innovations, coming up with new generations of chips before anyone has even digested the previous generation that it had announced. So it's doing great things. It's innovating. It's staying ahead of its competition. And perhaps it's justifying all the hype that surrounds the business and indeed its share price. But we know, and that's indeed the key question that you've asked, we know that everyone is looking at Nvidia. The question is, where might the next Nvidia-like success story come from? We think it will come from an area where people are paying less attention. As an example, even in the world of artificial intelligence, we have the biotech industry, and that's a great example of an underappreciated story. It's a space where AI can revolutionize things, drug discovery being a perfect example. Traditionally, drugs have taken over a decade to develop. They can take over a billion to 2 billion in terms of funding to develop, and the success rate of these sorts of endeavors is really poor. 95% of all drug trials end up in failure. But with AI, what new biotech firms are looking to do is they are looking to cut the time, they are looking to reduce the costs, and they are looking to improve the odds of success when it comes to drug discovery. So this is one underappreciated story. And certainly, once biotech firms come out with major announcements, that's when perhaps market interest will move in that direction. So at WisdomTree, of course, we see it as our job to identify the potential next big thing in markets that investors can keep an eye on and make informed decisions.
Now, there's some very interesting thinking on your website about what you describe as the AI value chain, and there's a little bit more detail there about how you categorize the companies in that AI value chain. Can you give us a little bit more information on that and your thinking around that?
For sure. So our ethos when it comes to thematic investing in megatrends, is to partner with industry experts. And for artificial intelligence, we've been in partnership with the Consumer Technology Association, CTA, who help us identify and pick pure AI businesses. And we classify them into three key categories. The biggest category is that of AI engagers. These are businesses that offer AI powered products and services. So, to give a few examples, engagers can come from any industry as long as AI is at the core of the business. So, Illumina, for example, is an engager which is using AI to predict disease causing gene mutations. Palo Alto Networks is another AI engager which is using AI to build cybersecurity solutions. Cadence Design Systems is using AI to design technologies of the future. So these are examples coming from different industries, but they all classify as AI engagers because AI is at the core of their business. The second category is that of AI enablers. This is where semiconductors like Nvidia, Qualcomm, AMD, and so forth would typically get characterized. Between these two categories, we think that most of the AI value chain gets represented. But there is a third category we recognize as well, and that is of enhancers. These are businesses playing an important role in the advancement of AI, but aren't primarily AI businesses. And one such example would be Tesla, which of course makes electric vehicles and makes clean energy systems, but it is leading the conversation when it comes to autonomous driving, given its cars have been collecting data and improving their software for a number of years. And so, if you put all of those three categories together, we think that you get a broad exposure to the AI value chain, which is diversified, and it's not necessarily dominated by the familiar big tech names, because that's really the essence of investing in artificial intelligence, is to give ourselves the best chance of capturing the next big success story like Nvidia.
And when we look at the AI value chain, as you've just described it, are you seeing any potential operational inefficiencies in that value chain that some companies could still exploit and profit from?
I think we are only just getting started in that journey. AI is forcing businesses to adapt and evolve in the face of this new groundbreaking technology. Take one example of Ocado, a grocery business, but one that we recognize as an AI company. They've got a fully they've got a business model which relies fully on artificial intelligence in a number of different ways. So they've got fully automated warehouses. Their delivery vans take routes which are optimized by AI. They forecast demand patterns and trends using AI. They offer a personalized customer experience using AI tools. They detect fraud using AI. And here's the most interesting thing. Now that they've built these AI capabilities, they have this Ocado Smart platform, which they can offer to other retail businesses that can really utilize Ocado's AI capabilities and tools in their business as well. And so that really is an example of a business that has adapted and evolved quickly in the face of technological progress and finds itself uh, evolving in that AI value chain. And it won't be the first. There will be many others. The key is how quickly do you embrace new technology? How quickly do you change with time?
And I wanted to move on now to the cloud, which is another area that used to get people more excited. What are your thoughts on the cloud itself? Because it's a little bit, dare I say it, nebulous. Can you really isolate it as a distinct investment theme?
So, with thematic investing in general, there are always going to be some overlaps. Businesses operate because they solve problems, not necessarily because they classify themselves within certain themes or domains. But still, cloud computing, if you think about businesses providing software as a service, as an example, they can quite easily be isolated as a distinct investment theme. Equally, cloud data centers and operators of cloud data centers can easily be classified within a cloud theme, either within the same theme or separately. It depends on how investors want to access the megatrend. Do they just want exposure to the software? Do they want exposure to the infrastructure behind the software? Because cloud computing, as far as consumers like you and I are concerned, we think of it as a software phenomenon, but of course, there's a whole infrastructure providing the foundation for the data to be stored and the computations to be carried out. Um, so you can easily build a portfolio around both the software side and the hardware side, but there are a few important things that investors should bear in mind when investing in the cloud computing theme. One, you can build a portfolio of cloud companies beyond the big tech names like the Microsofts, the Amazons, and the Alphabets of this world, which is our approach at WisdomTree. But it is important to recognize that when you do so, you are typically investing in emerging companies that are quickly growing their revenues, many of which might not even be profitable yet. So, this means that on that spectrum of value to growth, you have a high growth exposure in terms of your portfolio, which is very sensitive to interest rates. And that's something we've seen since the pandemic. The ebb and flow of interest rates will inevitably affect cloud computing. So the key, therefore, is for investors to understand the risk profile when they're investing in cloud computing, uh, and uh, and and those virtues of patience and diversification, the benefits of any theme, whether it's cloud or indeed any other theme, they shouldn't be expected to accrue in the matter of weeks or months.
You're listening to the Investing Markets and Money podcast from the Armchair Trader. Looking back over the last 15 years, we've obviously seen the cloud has expanded as an investment theme. It's become massive and something that a lot of investors now have exposure to. How have you, from your perspective, seen that happening? And also, can you give us some ideas on how you see it continuing to develop over the next decade and a half?
So I like this idea that until now, humans have had to learn the language of the computer. And the biggest turning point in the cloud computing space, or indeed any computing, is this idea that now the computer has learned to speak the language of humans. And this is the biggest game changer. It is so because it gives people like me who do not necessarily speak a number of different computer languages, like C++ and Python and so forth. It gives people like me the ability to get the computer to do things which in the past only programmers would have been able to do. Now, I saw a report recently from Bloomberg Intelligence which stated that by 2032, 12% of all software will have generative AI capabilities. This report came out last year, and this was a time when the world was still grappling with the excitement around ChatGPT. I suppose we are still grappling with the excitement around ChatGPT. But now I think that in the next 8 to 10 years, that percentage number will be even higher. And that's because we've now got a taste of how generative AI can give us a personalized experience in any application that we use. And going forward, more people will demand generative AI capabilities from all software, whether it is speaking to our car's infotainment system, planning holidays, or buying furniture online, what have you. We've now got a taste of this new tool that completely changes the way we speak with the computer and the way we engage with the various type of software that we use, something that was not the case in the last decade but will inevitably be the case in all of our interactions in the coming decade. And that's been the biggest turning point in this mega trend and its evolution. So what lies ahead is that businesses that will build their software embedded within AI and will have those AI capabilities will likely appeal to customers much more than those that are constantly trying to play catch up. So very important time for all businesses to revisit what solutions they are offering and whether they are fully up to speed with the AI megatrend.
Now, this megatrend has obviously created some very big players in the market, and if you look at the sector, there is a little bit of a impression that it's really been carved up by a few giant companies. Within cloud, is there, do you think, scope for new upstarts to come in and actually capture a bigger share of that market?
So you mentioned ChatGPT earlier, and I think OpenAI has proven that not only can, and drawing the David and Goliath analogy, not only can David defeat Goliath in this space, it can become so important that all other Goliaths out there want David on their side. We've recently seen that Apple announced a partnership with OpenAI because it recognizes that if it wants to offer AI capabilities in its iPhones, Apple's own models aren't quite as good, maybe, as OpenAI's models. And so, for certain sophisticated functionalities, it is best that the the two things talk to each other. So when you talk to Siri on an iPhone, it's best that Siri speaks to ChatGPT and gives the consumer, the user of the iPhone, an overall best experience and the best outcome, the best response, and so forth. And this really goes back to the idea. I like what Henry Ford said this about innovation in general, that if I had asked people what they want, they would have said faster horses. And that really speaks to the idea that not everyone can imagine what might you want or need in the future. AI is a technology the world didn't know it needed, but now that we have it, we probably can't live without it. How and where we might use it is where all sorts of creative ideas can play a role. And those ideas can come from anywhere. Sometimes startups and smaller businesses, starting from first principles, thinking about how best can they differentiate themselves from the established big businesses, big names out there. They almost are forced to thinking creatively, forced to thinking outside the box, and forced to be more creative. And that is exactly what we need in this new wave of technological growth. And that's why we think that any investment strategy in this space shouldn't just be exposed to the big tech names. It should recognize that the next big thing could come from some of the smaller players in the area.
I wanted to move on now to cybersecurity. This is obviously it's a theme I quite like. I write quite a bit about cybersecurity on the site. Um, we like Darktrace, for example, which is one of the poster boys for this sector in the UK. But is cybersecurity just about that sort of defensive model in the technology space, or is there more to this sector than probably meets the eye for many investors?
I saw recently a report from the World Economic Forum, and one of the one of the charts in the report showed a survey result in which they surveyed executives, more than 120 business leaders, and they asked them whether in the next couple of years or so, disruptive technologies like generative AI, do they give an overall advantage to attackers or defenders when it comes to cybersecurity? Now, more than half of all respondents, they said that the advantage goes to attackers. A very small minority said the advantage goes to defenders. Now, you might argue that maybe um, that's a good thing in the sense that executives are aware that there are risks that they need to be doing something about, but maybe they are less aware of how well cybersecurity can protect their businesses. That's something to draw from that survey result as well. And the things that they cited were, of course, the usual things that people are talking about right now: the advancement in adversarial capabilities in terms of more sophisticated phishing attacks. Now those phishing emails will no longer have easy to spot spelling mistakes like they did in the past, because attackers have access to large language models. And of course, deep fakes. Now imagine if deep fakes become more convincing, what does the future look like? Even I think uh, our experiment with social media is one that really is an experiment for us humans, in the sense that, do we have the instincts to question and challenge everything we see on social media? I still know very smart people who, whenever they see any random video going around on WhatsApp or any other social media platform, they take it as a peer reviewed piece of science, when of course that is not the case at all. So in a world when we have very convincing deep fakes and we're going into elections, for example, when we see those deep fakes and we see personalities saying things which we really want to believe that they might be actually saying those things, do we have the instincts to question and challenge and think critically that, no, maybe the default assumption should be that this could be a fake rather than a real video? And this is where cybersecurity, I think, has such an important role to play. I think cybersecurity is no longer just about defending against attacks of different sorts. It's about developing tools that protect us in the digital world. And this can't just be a defensive pursuit. It has to be a proactive endeavor. It has to be about identifying ways in which we, in the digital realm, are vulnerable to all sorts of things, whether it's direct attacks, misinformation, fakes, what have you. And it's about developing tools to protect us when we operate in that digital world. So we know that if we don't do that, the consequences would, can be absolutely catastrophic. So if there is one megatrend as this digital transition unfolds that is not optional, it has to be cybersecurity.
Yes, so the related aspect to this, of course, is the Internet of Things. I mean, the Internet of Things has always held out the promise for closer interaction between humans and all sorts of different devices. So the appeal there is that the hardware around you, for example, can become much more intelligent and much more responsive to your own requirements. And I'm seeing this already in my own household. Some of the new stuff we've got is much more capable of tuning itself to you the individual, rather than you the individual having to work around the actual device. But at the same time, these things rely on the internet, and then at the same time, as soon as you're connected to the internet, you're therefore vulnerable to bad actors as well. Is this, I mean, this is creating a vulnerability, but at the same time, I presume it's also creating an opportunity for the cybersecurity sector as well.
Totally agree. Certainly creating more vulnerabilities as we become more connected through more devices, but totally agree that it creates more opportunities for cybersecurity firms to play a bigger role in our society. The Internet of Things is quite quickly becoming the Internet of AI-enabled things. This new trend of on-device AI, being that devices themselves should be able to do computations and do and deliver AI functionality. So not only do we have more connected devices, we are now entering a world where more and more of these devices will collect more data, process more data, and produce more personalized outputs. So I mean, just imagine a world where you're driving along, you need to pay a bill. You give your car a verbal instruction to send a payment to a certain recipient. It does so because the chat GPT like digital assistant inside your car is fully connected with the banking app and so forth. And it's a great outcome for you because it saves you time while you're on the road. It simple command, it does it for you. Not saying that this functionality exists, but it could easily exist now that AI powered digital assistants are going to be introduced inside automobiles as well. But what that means is now that even our cars will have to be protected because cars are part of that Internet of Things economy, fully connected, and now AI powered as well. So another thing for us to make sure is covered when it comes to cybersecurity. We actually weren't surprised when Chinese mobile phone manufacturer Xiaomi recently announced that it's going into the EV market. Perhaps we were more surprised recently when Apple decided not to go there because the car is another way it can very easily be connected to your mobile phone and give the user a personalized experience. But coming back to the idea of vulnerabilities, yes, cybersecurity has to be holistic, it has to be thorough, it must protect the cloud applications, it must protect the servers, shield our devices, but also crucially, it must empower humans to make smart decisions as well. Because ultimately, if humans aren't trained and prepared, there will always be vulnerabilities. And at WisdomTree, we believe that businesses that cybersecurity businesses that adopt a multifaceted approach, a holistic approach to cybersecurity, covering all of these facets, your things, your devices need to be protected, your human beings need to be trained, your cloud applications need to be secured, your servers, so forth. All of these things have to be accounted for. So cybersecurity is not just one topic, it's a very multifaceted topic. And those businesses which approach the topic that way have the best chance of thriving as this technology and as this megatrend evolves.
Well, thank you very much indeed for coming on the podcast this afternoon to give us some of that perspective, Mobeen. That's been really interesting, and it's a fascinating sector, and it's definitely one that continues to throw up some amazing opportunities for investors. So thanks for giving us some insights on that today.
My pleasure, Stuart.
You've been listening to the Investing Markets and Money podcast from the Armchair Trader, and we've been talking to Mobeen Tahir, Director for Macroeconomics and Thematic Research at ETF Fund Manager WisdomTree. You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.